navigating homeownership, the path to homeownership. We do that. We like to do this the first Thursday of every month, and that the information is good for anybody that's in a situation where maybe they've been out of the market for a while and they have some homeownership related questions, or just anything along those lines that would help somebody understand this market just a little bit better. I'm not sure, some days Tali and I are finishing up the deal and we don't understand the market sometimes either. So it definitely has its moments. If you are a real estate agent, you are welcome to put in the chat where you're from. We love that. If you're a loan officer or on the Premier team, if you'll put in the chat your information and what area you're from, that kind of thing, that would be great. So if you'll put that in the chat, that would be awesome. And then we're just kind of navigate. I know I can see people on my deal popping in, so I'm going to give it just another second. Okay. But I was just going to give everybody just another quick minute. I like being able to watch the chat, but sometimes it's hard for me to watch the chat and the PowerPoint. And everybody can see the PowerPoint, right?
Yes.
All good? So navigating homeownership, the path to homeownership. One of the things I like to talk about when I talk about our Premier Nationwide Lending team is just a little bit about and I always recommend people kind of share a little bit of their story. And for me, my story starts with a veteran. So my grandfather is Donald Shriver, and he was fought in World War II. And after World War II, he came back and started a family. And when I knew him as a child, when my grandmother lived in Waco, Texas, which is where my parents met. When I knew him, he was a high school teacher, and I used to go to school with him. Sometimes he would take me to school, and all the high school kids would, fawn over the teacher, him being the teacher, the classroom teacher, and it was lots of fun, and I enjoyed it. I will tell you that I know now that with teachers, I have such a great respect for teachers, because where we are now and where we were then, duck and cover doesn't quite mean the same thing. So I think they invest in our children's lives, and I have a great deal of respect for them. We love veterans on our team. We do a lot of VA loans, and Philip Price, who's on the call, is a loan officer from Lovekin. And when we first started doing a lot of business in East Texas, there's a VA hospital in Angelina County in Lovekin. And that was a big importance to us. So I like to at least give ode to the past. How many of you, and again, throughout this, it's just an interactive deal. So you can participate and put some stuff in the chat or answer any of those kinds of questions. But how many of you had to share a bathroom with a brother or a sister growing up? I definitely did. And I always like to show this picture, because I think it is nice to be able to, and it's not letting me move the thing. Hold on one second. Oh, there we go. So how many of you just need some green tile in your life? So what we really enjoy talking about homeownership. By wisdom, a house is built, and by understanding it is established. Proverbs 24:3, the things that I would tell my young self at that time. But I would like to tell you that this house in Arlington, Texas, 1920 Westview Terrace, has changed a whole lot, but it really hasn't. This is kind of what it looks like today, actually. So, which is kind of funny. But I shared this bathroom with my brother, and my parents rented my childhood home for 19 years. And they didn't do that because they were not able to purchase or not able to make a monthly payment. They just did not know what to do next. And they were in a situation where a lot of people were, even a few years ago. They waited. If they thought it was going to get better in 6 months, or it'll get better in a year, and 6 months turns into 6 years, like that. So they rented my childhood home with this bathroom for 19 years. And so I spend a lot of time just talking to people about maybe having a plan. A lot of times people will come to us and maybe they're not ready to purchase a home, but what's the plan? What's a 6-month plan? What's a year plan? There are people on this call like Thalia, who I've known for years, and we've dealt with a lot of customers, and they needed a plan. And we were able to kind of give them some guidance and provide that. That's the front of the house that I always show. That same tree is still there, and lots of conversation about that tree, I got to tell you. So the next thing I wanted to do is kind of introduce Philip a minute, and Philip will tell you a little bit about this house and a story about home ownership that I really appreciate in terms of how he was able to do it.
Hello, everyone. I'm Philip Price. I'm a mortgage lender in the Lufkin and Nacogdoches, Deep East Texas area. I've been in mortgage lending since '06, seen some ups and downs, but I'm telling you, we are rocking and rolling here on Team Premier. We're doing great right now. So we're ready to help you guys with getting your people qualified. This is a little story about my house. I bought this house in November of '07. I got here a picture of the house. One of the few times we get snow down here in Lufkin. We don't get it as often as you guys in the DFW market, but we do get it occasionally. But this was house I bought in '07 for $170,000. It was a bit of a stretch at that time for me financially to buy that, but I'll tell you, it was the best investment I've ever made. That house is worth at least twice that at this time, and we've had some ups and downs on income over the years, as many of us do in commission-oriented business, but we somehow made that mortgage payment every month, so I'm really glad I got this house. A little story that Stacy finds funny. I had to get creative with my down payment when I bought this house. I think I had to come up with $13,000 or $14,000 cash to close on that, and this old boy didn't have a lot of extra money, so we sold some cows to come up with our down payment. So that was one of my little side things, is I had cows at that time. So you get creative on ways to come up with down payment. Fortunately, we have some grant funds available, and Stacey's going to talk more about that later. But we, as lenders, we get very creative on how we can make deals work, and that was how we made deals work for me back then. So anyway, that's my story.
So one of the things I love about that story is that whenever you sell something, if you have something of personal property, and let's say, I always make fun of the spouses where they have something in the garage that they don't need anymore, the motorcycle or the extra boat or whatever. If you sell something, you can use that money towards a purchase of a home, as long as we can prove that you owned it. Important that, and also show a bill of sale, which will then match the proceeds of what you have. So I laughed when he told me the story, because I was like, well, did you have to prove how many cows you had and the head, so he
we had to prove auction reports. It was exhaustive, and I'm sure that underwriting got a good hoorah with that. Yes, but we got it done.
He had to prove the value of those cows, so yes. I just thought that was super funny. So anyway, I digress. Poor Philip. I like to talk a little bit about my husband is also a loan officer. That's Ben, Zachary, and then Landry. And the reason why I wanted to show these two pictures is that I was sharing this earlier this week, is that in my backyard in my home in Flower Mound, Texas, when Landry was a toddler, right when I first got Landry, she was 13 months old. I planted this tree, and that's her watering it. And then recently we kind of did a overhaul of the backyard, and I can't wait for my sod to come in. But I tell you, she was standing next to the tree. I said, we should take a picture of this tree, because when we plant trees and we make roots, they grow, right? And if we don't plant trees and we don't plant or establish roots, they don't grow. And I kind of compared it to home ownership. So I just love that. And I know on this call, like my friend, like Myra there, is thinking, oh my gosh, how did she to be so tall? It seems like yesterday she was a baby, but that's what happens. So that's my life outside of mortgage. Little disclaimer about Premier Nationwide Lending. We work with title companies, we work with insurance companies, we work with all kinds of other companies to put it all together for your closing when you get to the bottom line. And what I always say is, the disclaimer is, we are in charge of the loan part. That's what we're in charge of. And we have to partner with different people, but along the journey, sometimes not everybody does, right? Most of the time they do if they're referral partners of ours, but we do provide this disclaimer. And then about our team, pretty much a lot of people have experience on this team. I noticed Denise is on the call. Denise is a former teacher as well in the Pearland area, and she offices out of our new Friendswood office. She's got some background and experience and can navigate people through the process, and we're glad to have her. There are other loan officers. Our team is licensed in Texas, Oklahoma, and Louisiana. We're, like I said, familiar with veterans, and recently it's not on here, but recently we won the award for Best of Denton County in 2023, and Philip won the award for Best of Lufkin. So we're excited about having experience and knowledge to be able to help people. So I'm going to jump right in. Investing in your future. These are the discussion topics that we're going to go over. Should I consider buying a home? Am I able to buy a home? How do I get started? What is the path from loan application to home ownership? I get these questions. We field these questions every day. Is it a good time? Is it a good time? Is it a good time to buy? And I go back and I use that tree example. When was the best time to plant that tree? The day that was planted.
Hey.
Yesterday, right? Yesterday. Today is a good day to plant a tree because you're going to look up and it's going to be next year or the following year. So we always feel like it is always a good time to invest and have equity in home ownership. And it's just about trying to figure out what is going to fit for you and your family. Am I able to buy a home? How do I get started? And the path from loan application to home ownership. And we're here to help navigate those things. Rent versus buy and the cost of renting. So one of the things I started out with was explaining a little bit about how my parents rented my childhood home, and they rented my childhood home for 19 years. And when you go and you do the math and the time frame if they had it, that would equal in rent about $497,000 of money, $497,000, right? So, you know, I tried to be as conservative as possible, but this just kind of gives you a thumbnail sketch of how much we spend in rent every year, and then what that equals over the course of 1 year, 5 years, 10 years, and 15 years. And every area in Texas is a little bit different. I don't know how, and I noticed Thalia is on the call, and she is a realtor I do business with in El Paso. And she also has done some property management. So Thalia, I don't know if you can speak to what rental cost is in El Paso, but it's definitely in that $1,200 to $1,800 to $2,000 range, don't you think? But that goes just kind of like I said, rent versus buy, money that's spent over the course of 1, 5, 10, and 15 years. And I know that one of the things I had a story, because of my parents. I know Ben's parents, he never knows life without them owning a home. They owned a smaller home in Tyler, and then they sold that. And every time they bought something else, they were able to upgrade their situation, because our goal is not to necessarily, show you how to buy a home, but how are you going to be in a position where you can sell something so you have the equity. House prices are up double digits in most states. What does that mean? That means they're increasing in value. I sometimes get that question, like, well, is this a good time? Because what if it decreases in value? Well, I know on this call with me and Ben and Philip, we both have builder relationships, and the builders will tell you that it's not getting any less expensive to create or build a property right now. So the expense is not going to get any cheaper over the course of time. So the value of the properties are continuing to increase, which is a good thing. It means that it's an established investment. Am I eligible to buy a home? These are the factors to consider for loan approval. The first factor is credit. The second factor is down payment and closing costs. And the third factor is debt to income analysis. And no two loans are kind of like a fingerprint. No two loans are the same. So nobody's, I've never, of all the hundreds and hundreds of loans I've looked at over the years, everybody's credit is a little bit different. Everybody's situation in terms of what they can afford as a down payment are a little bit different. And everybody's debt to income analysis is a little bit different. So factors that affect your credit score. Who wants to grab this screen and talk about it? Ben or Philip or?
I'll talk about it.
Okay.
Okay. Factors that affect your credit score. this is great information. Many people don't really understand factors that affect your credit score. I always, when I bring this up, there's always new revelations, it seems, in the audience. But as you can see, payment history, that's 35%. Pay the bills on time. One missed payment, that one 30-day late can really make a drastic reduction on credit score. So payment history is very important. The amount owed, what that is your use of your credit line and how much of that is consumed. So if you have a card with Discover with a $5,000 credit line and you have $4,800 charged against it, that's a substantial amount used of your credit line, well over 95%. That's going to factor negatively on your credit score. Whereas if you were using 1/3 of that credit line or less, that would be positive on your credit score. So it shows that you're managing your credit usage well. Credit types is another factor. So what that means is revolving, that's credit card debt. Installment is installment debt, that's going to be like a car loan or a boat loan or something. And then mortgage is the other category. So if you have these three different types of credit, that also rates well, and that affects your score up to 10%. And then new credit is another factor. So if you've had a number of new credit card accounts, for instance, you've had your credit ran a number of times, that actually is going to hurt your credit score. So you want to be careful on running your credit. Stacy, I think the one that you really can't read any text on, I think that's age of accounts, isn't it? That we don't see any text written there. I think that's the age of the accounts. But the longer you have an account, the better that rates with your credit as well. So if you have a credit card that you've had for long time, you never want to close that. You want to keep it active because the age of the accounts is a factor in your credit score. So when you open new accounts, that's going to shorten your average age of accounts, and this will tweak your number a little bit. So overall, manage your credit, be healthy with it. The longer you have credit, the better your scores are going to be, and keep your credit inquiries at a minimum and opening new accounts at a minimum.
Okay. So are you guys looking at the PowerPoint in a small screen, or do you have the big one?
The big screen.
It's fairly large.
Okay. Mm-hmm. Okay. I'm just making sure. I thought they were looking to read the notes. Okay. Now this is a question, and you guys can take a picture of this. Do you know what's on your credit report? I'm always amazed that we'll always ask a question sometimes about, do you know what's on your credit report? And you can go to www.ftc.gov. You can obviously take a picture of this QR code, but you can also go to annualcreditreport.com and get a report to look and see what is on your credit report. Sometimes you might have something on there that's erroneous. Sometimes you might have something on your credit report. Maybe you have some shared credit with an 18-year-old, or something like that, and you just don't know that it's been reported. So it's really, really important to know what's on your report and at least be able to take a look at it once a year, if not more, but at least once a year, so that you know how it reads. How much money do I need for down payment? I get this question every single day. How much money do I need for down payment? And one of the things that is very interesting to me is on conventional financing, the minimum down payment for a first-time home buyer is 3%. And yet I've been in rooms of people where I've said, what's the down payment? If you're doing conventional financing, what's the down payment? And I've had people say, oh, you need at least 20%. And I believe that and I say this to our realtors on the call, the more we can get the word out and the more we can educate people, I sincerely believe that there are people that are not purchasing a home because they're not getting the education to know that they can purchase a home with 3% down payment. And that 3%, if they qualify, can be covered by a grant, a down payment assistance program, and we do several of them. But there are 4 types of financing that we do. FHA, Federal Housing Administration. A lot of people use FHA when they're a first-time home buyer, and let's say they have had a few bumps in the road, credit-wise. Maybe they didn't pay something on time, something along those lines. That requires 3.5% down payment. It is used all the time. We love FHA. It is a great way to be able to get into home ownership. I mentioned conventional. Most of the conventional loans we do is 5% down. But if you're a first-time home buyer, you can qualify for 3% down. And then a VA loan, which I mentioned in the beginning, is a veteran administration loan. That is a 0% financing. We have a new person on our team, Alyssa, who is a veteran. So we love new people and we love veterans. And we were talking about this because we want to spend some more time educating people on a VA loan. It's 100% financing. There's no mortgage insurance premium. It is really one of those fantastic loans. Ben can speak to it a little bit, again, because both his parents were in the Navy. So it was something you were able to utilize and be able to take advantage of because they qualified for it. A USDA is a rural area type of loan. It's 0% down, and rural areas are not going to be in your metropolitan areas. It's not going to be like in Dallas. The USDA map, someone can put in the chat where they can look up USDA and USDA.gov, but you can put that in the chat so that they can search. But what happens with USDA is it's property and area specific. And I've been doing loans in the Denton County area, Denton, Tarrant, Dallas County area for so long. It used to be that Parker County, where Weatherford is, Weatherford used to be USDA, and it's not now. There's some areas, I think Myra was working on something that was in Sherman, and there are areas of Sherman that are USDA. Is that right, Myra?
Yes, ma'am, that is.
Okay, good. And in that area, and maybe even some of the Gainesville areas too. But there are still some rural areas that qualify for USDA. It is very specific in terms of qualification, the debt to income ratio and credit score, but that may be something that's attractive to you if you want to live in a rural area. Closing costs and prepaids. What I say about closing costs is that it is just, we have kind of evolved in the market, right? It used to be a couple years ago, the seller wasn't going to pay for anything. Well, now the sellers are more willing to maybe assist with closing costs. Costs that are associated with purchasing a home are listed there. Title fees, appraisal of value, again, the closing fee, that's kind of an escrow fee. Prepaids are 1 year's homeowner's insurance. We make sure the property is insured for 1 year. Then we create an escrow account. We'll talk a little bit more about the escrow account, property taxes and insurance, and daily interest. The property might need a new survey if it has an existing survey. And typically, if the existing survey is less than 10 years old and they haven't done anything else to the property or added a pool or anything that's a permanent fixture to the property from the last survey, then we can use it. So that kind of saves you a little bit of money. And then home inspections that you would do at the very beginning. And I don't know of the realtors that are on the call, but later when we get into the final part of this, I do want to talk a minute about home inspections and why it's important to get them when you're at the beginning stages of the contract. But there's these costs that can be paid 3 ways. A borrower can pay their costs for closing costs. A lender can pay some of them, or a seller can pay some of them. You might see a contract that might read seller paid title, or seller paid survey, or seller provided survey, or you might see seller paid closing costs with a specific amount that would read on the contract. And that's why it's very important when you are purchasing, if you can use a professional licensed realtor to assist you with negotiating these items. But those closing costs, I've had people say, well, how much do I need for closing costs? And a lot of the closing costs are fixed. For example, too, when you work with Premier, our our lender fee is a fixed fee. It's $14.34, no matter what the purchase price is, no matter what the loan amount is. That covers the underwriting, the processing, and the funding of the loan. Those three things total $14.34. It's a flat fee. So it's good. It doesn't vary. So the realtors that are on the call that I've worked with in the past, they're like, when they're talking to the customer, they know it's a flat fee. It doesn't vary if it's the purchase price is $200,000 or $500,000 or whatever. So that's one of the things that's good. Now you start talking about purchasing points and things like that. That's a different conversation. But as far as like regular closing costs, it really is important. They're fixed fees. So it's really important that you save some money towards that or for that. Where will the money come from to purchase your home? And these are all different areas of ways that you can have money towards the purchase of the home. Who wants to cover this slide? Ben or Denise or Philip?
I got it.
Okay.
So where will the money come from to purchase your home? You obviously can have it, you saved it up in your checking and savings account. That's a great source. You can get a gift from a relative, family member. Sometimes people's employers even give gifts. A lot of people have a lot of money saved in their 401ks or retirement plans, and you have to check with the plan, but many of those plans will either let you get a loan against them, and we don't count a 401k loan. That's your own fund. So whatever the loan payment is will not be counted in your debt to income ratio. And some of them will allow a hardship withdrawal where you can just withdraw the money for down payment. You can cash in a life insurance property. You can sell personal property like a car, a boat, a Harley, whatever, something like that, and use that money.
Y'all heard it here. He's willing to sell a boat.
I didn't say that. And employers, again, a lot of employers have assistance programs where they either loan or give you a gift. We close a lot of loans around April 15th with tax refunds. So if you're getting something back from Uncle Sam, that's an excellent source. A second job, that's fine if you've saved up money, you've got a side hustle and you're making money and putting it in the bank. The mortgage credit certificate, which Stacey's going to talk about a little later. And then we also have down payment assistance programs that allow you to get up to 5% of your loan amount. So if you're borrowing $300,000, that's $15,000. And they're deferred and you don't have to pay them back. That they will cover, like on an FHA loan, your entire down payment plus a little bit of your closing costs. So those are some of the ways you can get money to purchase home.
And if somebody will put the TSHAC website, TSHAC is a program, Texas State Affordable Housing Corporation. The TSHAC, I know it doesn't look like TSHAC, but that's how they pronounce it. So it's not grammatically correct, but the TSHAC.org site, there is, you can go on there and you can even take an eligibility quiz. There's more information on there about mortgage credit certificate. The mortgage credit certificate is a tax credit for the time you've owned the home as a primary resident. And what I love about the mortgage credit certificate is that it does, like I said, it does allow for the time that you own that home to have an additional, like you have tax deduction, but an additional tax credit. And it's very unique. Sometimes you might qualify for down payment assistance and not qualify for the mortgage credit certificate. The certificate does cost a little bit of money, but long-term, it pays for itself. So it's not actually going to help with the down payment, but it does help long-term with taxes. Who needs a little help with taxes sometimes? Of course. I always like to just mention, what does it take to waste $10,000 a year? I spend a lot of time, and I know that with first-time home buyers, a lot of questions always come up about where the money is going to come for down payment and how we're going to be able to save the money and all that kind of stuff. And you can either put it in the chat or just speak up. But where do you think the most miscellaneous money is spent every day?
Starbucks.
Okay, Myra, very good. Starbucks is a place, but in general, fast food. when I go to look at bank statements or stuff like that, that is one of the things that we really take a look at. I know that with Ben and I, we dated for many years, got married in 2021. And then when you're married, you start to kind of figure out a budget and everything like that. When we really started actually making a food plan, cooking things on Saturday and Sunday, we like to cooking things that would get us to Wednesday, or for meals, for dinner, stuff like that, because it's just so simple. There's so many options for restaurants now. And it used to be, it used to be that with fast food, it was somewhat economical. Well, now you go through, any type of fast food, Chick-fil-A, I'm a Chick-fil-A-er. I love it. I love it. Diet lemonade is the best. But when you go through fast food now, it's not, it may be convenient, but it isn't not, costly. So you think about that on a daily basis. $27.40 a day of miscellaneous spending adds to $10,000. It's crazy. How much can I afford? And this gives you the debt to income analysis. Is there any questions so far? If there's any questions, kind of put that in the chat. Y'all can put the website for TSHAC. TSHAC, by the way, is a program that is near and dear to my heart. I serve on the advisory council and enjoy using that program to help people navigate home ownership and be able to get into a home. I've had customers that have used TSHAC multiple times. You don't have to be a first-time home buyer to be able to utilize it or qualify for it. So let's talk about debt to income analysis. The debt to income, I'm going to go through this example, but honestly, it's, your income divided by your total debts divided by your income, including the new mortgage payment. So your monthly obligated debt. So for example, you might have a credit card with a $5,000 balance, and your monthly obligated debt on that might be $150. You might be paying more, but what I care about is the monthly obligation on that credit card. And Philip might have the same credit card with a $5,000 balance, or $5,000, and his monthly obligated debt might be $175. Maybe his interest is higher than mine. That's why it's important. The credit score is so important, because your monthly obligated debt is indicative of what you're paying in interest. So we don't spend a lot of time so much on the balances and as much as we do what you're obligated to pay on a monthly basis. So in this example, the monthly income is $8,000, and $8,000, 45% debt to income in this example equals $3,600 a month. So in this example, someone has a credit card or credit cards where they're obligated to make $200 a month in payments. They have a car payment, and I've yet to see a car payment lately that's $300 a month, but maybe you have one. We've seen a lot of high car payments right now. Student loan debt, $400 in this example, and that total debt, monthly obligated debt in this example, is $900. So the monthly debt allowed at 45% debt to income, $3,600, less what they're already paying in monthly obligated debt, $900, and that means the amount allowed for housing in this example would be $2,700. So again, everybody's situation is a little bit different. We just wanted to try to provide an example. We've done loans where the debt to income ratio was 50%. On a VA loan, we can do a debt to income ratio of 55%. Where we're doing a loan with down payment assistance, we like to have it be at 50% or less. But this just kind of gives a little bit of different examples. Like I said, everybody's situation is going to be a little bit different with what their monthly obligated debt might be, and also what their income might be. It's all relative. My grandfather used to tell me everything is relative. Health and wealth. Someone else, with wealth, someone's got more money and someone's got less money. Health, somebody's healthier, someone's less. So we just across the board want to be able to provide this pie chart so that we're at least explaining, so you can sit there and think in your own mind, how much can I afford? What makes the most sense? What's included in my monthly payment? Monthly payment, if you put down 20%, you don't have to escrow. You don't have to have an escrow account. If you're putting down less than 20%, you would have an escrow account. And in that payment, that monthly mortgage payment, it would be principal, interest, taxes, and insurance. And if it's less than 20%, you'll also have mortgage insurance premium in there. The principal is the amount that borrowed to purchase the home. The interest is the percentage of principal based on the interest rate. Taxes, property taxes on the house, which can adjust, from time to time, and insurance. You have a fixed rate. Your principal and interest payment on a 30-year fixed is going to remain the same. The only thing that can change your payment would be if taxes change or insurance on the property would change. With insurance, we work with some incredible people that are able to give us homeowners insurance quotes when you're looking for a property, and it kind of explain how to properly insure the house and what to insure. We work with some great people for that in the escrow account. Anything on that I didn't cover? I always say the due date, the payment due date is always the first of the month. I know that I hear people and I hear mortgage professionals talk about you have a grace period to the 15th. The payment is due on the 1st. That's when it's due. If you decide to pay it a little bit later or whatever, really honestly, the payment is due on the 1st. Anybody have any more input on that?
I would just say that if you pay it late, even though it's not technically late, I mean, every day that you don't make a payment, your principal balance or your interest is growing.
Oh.
So the sooner you hit your principal, like if you do it on the 3rd, it doesn't sound like it might be $60, but $60 over 360 payments, comes out to $20 grand ish. And so pay it on time, pay it early if you can, knock down the principal as fast as you can.
The other thing is we work with once you're closed on your loan, we work with investors that allow a bi-monthly payment. I actually pay my mortgage instead of paying it monthly. I'm a half a payment or a payment ahead. So I pay on the 15th and the 30th. So on my mortgage, and I round up a little bit. And anytime you can get in a situation on a 30-year fix where you can pay one additional mortgage payment a year, one principal and interest a year, that will take that 30-year fix down to about 26 years. So it is kind of crazy how that can work. Taxes. I always talk about taxes because whenever you're making the decision to be a homeowner, or maybe you're currently a homeowner and you're thinking about investing, it's so important to keep a tax folder, to strategize, to look at retirement accounts, to make sure that you're hanging on to the things that apply to that property and the taxes that go with that property. There's a company in South Lake, and the CPA's last name is Peniter. I've worked with Paul Peniter for so long. His son now is the CPA. His name is Nick. And he's really good with first-time homebuyers, but really good once you've owned a home too. It's something that you really want to try to make sure you're getting good advice. How do I get started? I get that every day. How do I get started? These are typical items that we're going to need for pre-approval. Who wants to cover this page?
I can do it. Okay. Yes, this is a common question. What do we need to get going on this pre-approval? So the first step is we're going to complete a loan application. This typically is done online. Realtors, we can give you our link to our website to get an application started. Here in Lufkin, sometimes I have customers that I do that in person with, but most of the time that's done online. We're going to need your pay stubs. We're going to need the last 2 pay stubs covering the last 30 days. We also it needs to show the year-to-date earnings. Why is this important? Because if we're using bonus or overtime money for qualification, we have to see what those numbers are and average that out. We're going to need to see their last 2 years of tax returns if they're self-employed. Why is this important? Because we go by their net income plus depreciation. So, we don't go by their gross income. Oftentimes, they'll just put that amount on the application. When we find out they're self-employed, have to look at their tax returns. It's not quite what they said their income was because they're having so much in write-offs. So that is something we have to look at on self-employed. 2 years of W-2s or 1099s. So in addition to those pay stubs for the employed W-2 borrowers, we're going to need their last 2 years of W-2s. We'll need their photo ID. We need to also make sure their name format matches the application from the ID. Need to make sure the ID is valid ID, that it's not expired. And the most recent 2 months bank statements for all their accounts or their investment accounts, wherever they're getting their funds from for their cash to close. We need to look and see where that money's coming from and that there's no large deposits or withdrawals.
Perfect. The online loan application that we use for our customers is encrypted. It's part of a system, a software that we use. It's part of Encompass, so it is encrypted software. And you can upload, it's a portal. When you do an online application, you're creating username and password that we don't even have access to. And then you have a portal. And then in that portal, you can upload documents for us to take a look at. We have offices in Lovekin, Spring, Friendswood, and Flower Mound, and we see people face to face. Sometimes people want to bring their documents. That's fine too. Sometimes we've been able to send a FedEx label so that we can get documents. But however is the most comfortable path for you to be able to do it. But we do, these are documents that we do need and documents that will help us to determine when we talk about a complete loan application, that is crucial. I mean, the most crucial thing is having completed information so that we can provide your realtors with a letter that they can trust is accurate. We have a Premier Express program. If we have automated employment and income and automated assets, and if the property, if you're putting down 20% in the property, we're able to stipulate to the value and we are able to waive the appraisal. That doesn't happen every day, but sometimes it does happen. And if we're able to do that and you're good with that and elect not to get a survey, then we're able to underwrite that file and move it through the Express program in 24 hours. It's a really quick program. Talk to the loan officer before you do any of the following. I cannot tell you. I know Kelly Campbell's on this call right now and she's like, oh, please talk to the loan officer. Changing of employment, even if you're staying in the same industry. If we're in the middle of the loan, we're scheduled to close in 2 weeks. We do a last minute verification of employment. We'll verify in the beginning. We go back to verify again and you've changed employment. We're going to need to know that, even if you're in the same industry. It is a big deal, big deal. We need 30 days worth of pay stubs in that employment to count that income. So it's very important. Significantly and a significant increase in credit card balances. So the reason why it has the caution on there is a lot of people get excited. We get under contract and we're so excited. We can't wait. We're going to go buy this house. It's awesome. And then you go to a furniture store and you have 0% interest and you run up a bunch of money on an on a furniture credit card, or you apply for credit and it will then give us a notice that you've applied for credit, and then we're going to have to figure out what you applied for. And if, again, this gets back to monthly obligated debt, even if it's a 0% finance, there's going to be some monthly obligated debt potentially associated with that. So we don't want credit card balances raised during the process. The reduction of asset balances. I was in the middle of working on a loan, and I think it was Thalia's actually, and I know she's on this call. I was working on something and somebody loaned some money to a brother or a sister in the middle of the transaction. It was a couple of years ago. And so I can just tell you, like, don't reduce the asset balances. Ben, I want you to share your story on that loan where you went to find the money and it wasn't there.
So, yeah, regarding asset balances, I had a great couple, a police officer, I think he borrowed money or withdrew money from his 401k. And this was a couple we'd worked with, they had some credit score issues and everything, but it was a tough loan. We had it all together and they got the money out, and since they'd had some, financial issues, they gave it to their dad. They had it wired, from the 401k company into their account, and then they wrote their dad a check and he put it in his account, and they weren't on that account. So when we went to, we were verifying things towards, we got the assets verified, and we went back and like, where'd the money go? Well, we gave it to our dad. Were you on that account? No. And so now it looks like, you're either getting a loan from dad or whatever. We fixed it. but it caused them some major heartburn in the middle of the process. And they were just trying to do, not spend the money. So they gave it to their father to hang on to, which I get. But if they would have talked to me before that, we'd have said, no, you can't do it. You're just going to have to hang on to the money and not spend it. And it worked out, and they got the loan. But it definitely caused, like I said, some heartburn amongst the loan officers, borrowers, and realtors involved in the transaction. So we're on your side. We don't share your information with anybody. Ask your loan officer. He's like your attorney. They're not going to tell anybody anything. But they're going to keep you on the right path until you get closed and funded in that house.
Perfect story. It's amazing that worked out, but it was perfect story. So failed to disclose all debts. We're gonna find out. So if you've got a debt and it's not on the credit report, it doesn't mean that you don't owe it. The biggest thing with debts is, let's say, for example, you are paying child support. If you're obligated to pay that child support on a monthly basis, you need to let us know. Apply for new credit, talked about that. No large undocumented deposits. I was working on a loan and got the bank statements at the end to finish up the loan, and they had received a foreign wire transfer from Colombia in their bank account. And I was trying to figure out how to document it. Now I figured it out, but still. Don't change banks. Don't move money from one account to the other. That really happened to me. Don't co-sign on a loan. You're about to close on a mortgage, and then your kid needs a car, and you decide to co-sign that car. You're obligated to that debt. If you co-sign for something, you're obligated to that debt. Have your own realtor is so important. I'm so excited that we have realtors on the call, because sometimes when we do these first Thursday of every month, and sometimes we'll have realtors on it and sometimes there won't be. But today there's some excellent ones on here. And I don't know if they would like to step in and speak on this topic a little bit, but why you need a realtor. Here's the thing. You are entering into a contract. This is a legal document that you're entering. And I would think the biggest, most important thing about a real estate agent is that they are helping you take the emotion out of it. Purchasing a home, selling a home can be very emotional. And it's a big decision. It's a big step in some cases. So it's a business decision. So you need someone that's on your side that can take the emotion out of it and just deal with the facts. What's the value? How's it look? Is the list price correct? Those kinds of things to help you find and I don't believe there is a perfect home out there. I don't know that the perfect home exists, but all the factors that go into purchasing a home that you should consider. One thing you should consider is, how far is it from work? Do you commute to work? How far is it from your church? How far is it from the daycare? Some of those things. A realtor helps you to be and stay objective. Anybody else want to jump in on this topic?
I will. I mean, just from 20 plus years experience in the mortgage business, the worst transactions we do have no real estate agents involved in them. When it's just a buyer and a seller, and especially buyers, there's all kinds of benefits they can get that a realtor is second nature to them to, lead them through that transaction. I mean, they'll end up paying for stuff they don't really need to pay for and all that. So, people say, well, realtors cost money. The buyer doesn't pay the real estate commission, number one. And number two, even if you're on the listing side, you end up making more for your house and saving more on the house. It's a fair deal if you have realtors involved. You need a professional taking care of you, because like Stacy said, it's probably the biggest transaction you'll ever make in your life. And you want somebody who's a third party that's looking out for your best interest without the emotion. Yeah. So that's my 2 cents on why you need a realtor. You need one.
And here's the thing. He touched on it, but when you're purchasing a home, the seller is the one that pays the commission. When a realtor is representing a buyer, the buyer doesn't pay the commission, the seller pays the commission. And one other thing I'd like to say is that if you decide that you want to look at new construction, and we've become a preferred lender for a new construction builder on the west side, anything west of Fort Worth, there's a lot of areas of where they're building right now. And on new construction, you still want to have representation, you still want to have somebody that speaks on, has your best interest, even when you're purchasing new construction or a for sale by owner. You found a house and you like it and it's a for sale by owner. You still need assistance with that. They can help you with that negotiation. They communicate with the seller's agents. They also communicate with the title company, which is very important. From contract to closing to ownership, this just kind of gives you a little bit of a path. Real estate purchase, loan estimate, locking a rate, processing, underwriting, what we do while we're waiting. It's a very big hurry up and wait. When you get under contract and it's like, oh, you got under contract and get all your documents, and then there's a little bit of a waiting period when it's cooking. I call it the loan is cooking, the property is cooking, and we're getting all those items, appraisal and title and setting up insurance. And we get all that back, and then we get to the very end where you're qualified, the underwriter is saying we're good to go. Then we disclose the loan, initial closing disclosure, then we have to wait 3 business days legally. We get to closing day, and then we sign documents. And when the loan closes and funds, then you can get the keys and you can move in. And it's a wonderful day on that day. I always show the YouTube channel. All of the classes that we do will be uploaded and on the YouTube channel for you to go back and look at. It is free. You can subscribe. It's free. There's all kinds of other resources on the YouTube channel, some other classes that we've done, or other information about mortgage related items. And then this is just a list of our team members. Again, Philip is licensed in Louisiana. Deanna's licensed in Oklahoma. Both of them in Texas, and Ken's in Spring. We have a new loan officer on our team. Her name's Maria. We need to give her some time to get going, but she speaks Spanish, so we're very excited about having her. And a couple of other ones that may be starting soon, so we're excited about that too. At the end here, a couple things I want to share. We as a group in December created some core values and kind of a mission statement for our group. We believe in faith and family, accountability, integrity. We are all driven and very committed to the process. We love lunch and learns. If you're a realtor and you've got a team and we can come and teach or provide some education, we'd love to do that. And we, like I said, we have people on our team that are experts in non-traditional mortgages or beach properties. Ken does a lot of second home properties. I did a podcast with T-Shack about credit, and that's the QR code for that. Usually within 24 hours we'll send out an email and we'll remind you about this, but it's about 30 minutes. I did a podcast very involved about credit, so you might want to take a look at that. And then we always ask for a review. Give us a review or follow us on social media. Several of the loan officers are all on social media. We have business accounts on Facebook, Instagram, LinkedIn, and again, I mentioned YouTube. We would love for you to be our friend so that we can help you in the process. We would love that. And if there's anything else, if there's any question, I think we managed to end on time, but we definitely have room for a few questions. I'm going to go back to go back to this screen and then open it up for any questions or final input that we might have. I know that we gave him the T-Shack link. I saw there were some questions about USDA and the Brazoria County comment. I love that. Any other questions? You're welcome, Brady. Y'all the quietest of all the classes we've had all year long. It is the quietest group of people. I've never not heard realtors speak up, first of all, but it is a quiet group. But I enjoyed it tonight. Really enjoyed Thalia. I love seeing you. I wanted to while we're on the call, I'll let Ben know that he sent flowers to your mom and not to you. So yeah, love that. Love that. That's awesome. I love the network of realtors we have, because a lot of you work in an area and maybe you've got a customer and that customer's you're listing that house, but they're moving to a completely different area like El Paso or like the Denton area where Myra is, or Carmen is Friendswood. Carmen, are you Friendswood, Houston, kind of that area? So I love it when we're on here and we have different areas, because we want to make sure we connect, because the number one thing that's important to us, no matter what, is the customer. We have to take care of the customer. And we have a lot of loan products, and we do everything we can to provide the best possible loan product specific to the customer, but we don't have every loan product. So we even have mortgage colleagues that we enjoy working with, because we want to make sure that the thing that we do the most is take care of a customer. So on behalf of our whole team, and this evening, I really appreciate you guys taking the time to be on the class. And if you want to, it's the first Thursday of every month. So the next class is October the 5th, and we'll be sure to send that out in a link when we send the email out tomorrow. Mortgage terms, we'll send out mortgage terms and different other, a couple other things that I know that Kelly will send out your way that will help. Y'all have a great evening. And if you need anything else, you give us a shout out. Did the loan officers, did y'all put your information in there? Your emails and stuff? I'll put mine in there too. But you can shout out to us if you have any questions, and we will connect and answer anything that you've got. Okay? Have a great night. Everybody have a great day.